Light is okay. All right, good.
Life
All
is
right,
okay.
well, we are.
Travis is sailing the high seas here, and he's committed to showing up. So
Whatever, man. Yeah, Peter's like, "Oh, you're on vacation." I was like, "No, man, it's a commitment I made to myself because it's like, here's the commitment. It's like working out. I worked out right before the meeting, so it's like if I'm physically able, if my schedule is able, I have to commit to showing up, just as a habit because I've been super lazy lately. So that's why. Yeah, and my family's a little stressed and upset with me because I'm trying to squeeze in a meeting on vacation. They're like, "No working." So our rule is 5 minutes. So I'll be quick. And Peter, you can finish off when we're done.
yep.
Does that work?
Yep.
Okay, great. So I don't obviously I don't have my computer. I don't have my charts or anything. But I was thinking about some things just wanted to talk about. One, I don't know what the market is doing. I haven't looked at the market. What is it doing today? Is it falling, Peter?
It's going up again. It's starting to recover.
Okay. It's starting to recover. Okay. So right before I left, it tanked what 2% yesterday.
Yeah, quite a bit.
I think right before. Yeah, right before we got on the boat, I was like, great, of course, the stupid market literally falls right when I go on vacation of all the times of the year. And the crazy part is I haven't taken a vacation in 4 flipping years. I'm like, great, right? The one time I take a vacation. So what do you do with that, right? So I was thinking like, okay, people are like, well, do I close out all my trades? Sometimes we get those questions. We haven't had them in a while. And there's actually 3 things I think about doing, and that is either closing out all my trades, buying in temporary insurance to carry you through your vacation, or excuse me, riding through like with no insurance, just pray to buy and hope, the hope strategy. Hope strategy doesn't work for me. So I was like, closing all my trades is kind of too drastic. We're only gone for 4 days. So I was like, let me just buy some short-term insurance. And so right before we quit the boat, I told my wife, let me log on, make sure everything's working as it's supposedly, like the account's not blowing up. And everything was, and I was able to squeeze in like 3 more covered call trades within our personal account. So I told the kids, they were like, we know we're going to cruise. I was like, hey, I just made $600 so in 10 minutes. So I was like, I think that's worthy of my little 10-minute departure of looking at my computer. So, give me a break, kids. But anyway, so those are the 3 things you can think about if you're traveling and vacationing, because I put on Twitter how I envy buy and hold investors, how they don't have to worry about that. They don't have to worry about the gyrations of the market and things like that. That's just they're long-term investors. So my goal as an active investor is to try to, bridge that gap to make active investing as close to buy and hold as I can, as far as stress-free, set it and forget it, without the risk of buy and hold, right? Because we don't want to watch 50% of our accounts go out in the market. And that's why I teach a concept called stock market insurance, buying insurance when you need it. So I buy stocks at all-time highs, I buy insurance, or now I went on vacation. I've made some short-term trades that offset the trades I'm currently in. Does that all make sense, Peter?
Absolutely. Yep.
I'm talking super fast trying to get this done because I have a boat I have to catch in like 6 minutes, or else I miss my excursion. So yeah, my wife would not be happy. No, I'm not. So hey, I am committed, but I'm sorry, you all. I just have to be short. Peter, you can take it over from here. I'm going to sign off. Since you're an organizer, when I leave, it still should be okay, and you can still keep recording.
Yeah, just say leave webinar. Don't say stop webinar.
Right, exactly. All right, you take care, buddy.
All right, have fun.
All right, see you. All right, thanks, bye.
Okay, so I think, so Travis has signed off. So, and remember, real quick caveat, remember, all the stuff we talk about is for educational purposes only. I'm not giving you guys investment advice. I'm not showing you stocks that you should trade. I'm not showing you strategies that you should trade. I'm just showing you how we do it. And if you're not sure and you don't know what you're doing, then don't ever trade with real money doing it this way. Always use your paper trading platforms. Just about every broker has them. If you're not sure how to do it, call your broker. They'll tell you how to do it, and you can trade that way and see how it works out. But again, we're not giving you investment advice, for educational purposes only. All right, so as we can see, so welcome to another weekly recap with Travis and Peter. Travis is on a cruise, so he is not with me today. He was for a short snippet there, and he'll be back next week. So I'll be kind of taking the reins from here. And I don't have a ton to cover. I'm going to cover the overall general market. I'm not in, there's only a couple positions I'm in, and they're very long-term. They're Buffett strategy positions. So they're actually set it and forget it. So I don't have to worry about what the market was doing. So if we look at the market, it's in a pretty steady decline, although today is a pretty good up day. And we're not really sure what's going to happen. Now, from last week, from our weekly recap last week, we talked about this. We use Market Club. Market Club gave us some red weekly trade triangles. So I exited all my bullish positions. The ones that I still had open, I exited those. My SPY bull puts were very small profits for the most part. I didn't take any losses, but then I did some they're really short-term 3-day bear call spreads. Well, those didn't work out for me because the market although you can see it went down last week, the days I was in that, and Friday especially, was a huge, it kind of went back up. So I had to exit those positions for a small loss, not a huge loss. I think I lost, I spread those bear calls across 3 accounts. And I think I took a total loss between all 3 accounts of maybe $150, if that. I don't even think it was that. I think it might have been like $40 or $50. I haven't updated my spreadsheet today. So not a big deal, but those are something we had one of our members ask me if we buy protection. That's one of the ways we do protect our bullish strategies on a short-term pullback like this. We'll buy a bear call spread. I've only done it twice now. Both times have been losing, but I'm going to continue to test this strategy for the next year. I don't like doing just 1 or 2 trades, and if they don't work out, I quit on them. It's kind of like working out. If you go to the gym once or twice and you don't like it and you quit, well, you're not going to get in shape. So you got to really commit a full year. We always talk about that. Always commit at least a year to whatever new strategy you're doing. So that's what I'm doing there. Today's an up day though, and I haven't looked at Market Club, so I'm a little behind on what I'm doing because both my daughter and my wife they left. They went to Connecticut. My wife left yesterday, and I had to bring Gabby to the airport this morning. So it's just me and the dog this week. So I'm a little bit behind. But that's the beauty of being able to do this. I'm out of all my positions, like I said, so I don't have to really worry about it. The only other thing I was going to cover was we had a member gave us some charts to look at, and I'm just going to cover those. These are, I'm just going to show you guys kind of my process that I go through. So usually the first thing, so there was 4 different tickers, and we'll leave them in the comment section below, but it was XEL, FE, EXC, and BLL. So typically what I do is if I find something, let's go here. Make sure I didn't stop doing anything. So XEL. Now, the first thing I'm going to cover 3 things about or one thing about the first 3 ticker symbols: XEL, FE, EXC. All 3 of those are energy stocks. So the first thing is you don't want to trade these all at the same time because they're energy stocks. They're going to typically trade all the same. So if one's losing, there's a good chance they're all losing. So you want to be careful when you're trading a bunch of stocks in one sector, and that's not just energy. That's if you were trading in the retail sector. If you're trading Macy's, you don't want to really be trading Macy's, Walmart, Costco, Home Depot. If you trade all those, then you're not diversifying yourself within the market, right? So that's something to just be mindful of. It's just like when we trade the ETFs. I don't typically trade SPY, QQQ, DIA all at the same time because all 3 of those typically trade with each other. So if all 3 of them are losing, then all 3 of my trades are losing. Sure, the benefit is if all 3 are doing well, all 3 your trades are doing well, but we always focus on risk first. So I'll just take one of the 3 and trade that and then diversify, and then maybe I'll use Apple, or I'll use a different ETF, like maybe IYR, which is a retail. I'm not using IYR right now, but just an example of it. So just something to think of. So the first thing I do is I look at the chart. So I look at, this is a 1-year daily chart, and it looks pretty good. This thing overall is going up, and it's going up in a pretty big way. It can be a little volatile. You can see it can have some really big up and down days. So that's something I would be mindful of when I'm placing my trades. And I would most likely place longer term trades. If I place shorter term trades, you get caught in a big pullback day and it wipes out your whole trade. So it's something to think about. The next thing I do is I then look at a 2-year chart, right? So for Success Academy members, they see this, they know what we're doing here. We look at a 1, a 2, and then a 5-year. So the 2-year chart, overall, it's been going up. I mean, it was a little, it had a big downturn here, which is when the market kind of downturned. This is an energy stock, so you got to kind of keep tabs on the energy market. And that's kind of what you're seeing here. And this is the other reason why this can be kind of a volatile stock, is because it's the energy market. And then the other chart we look at is a 5-year chart, and you can see overall this thing is going up, right? So it's doing good over the 5-year term. So from that perspective, it's really good. The next thing I go do is I look at, and I want to make sure, let me just make sure, yeah, my charts usually come right over to my trade. Okay, so the next thing I want to do is I want to look at the options that it trades, okay? And you can see that there's not a ton of options here. If we kind of shrink these down, there's not a whole lot of options there. So that's kind of a caution for me, because it doesn't give me a whole lot of opportunities, right? If I don't want to trade in a 38-day, then I got to go all the way to a 129-day. Open interest at the money is pretty good. At the money, a little out of the money is really good. Anything in the money is no good, right? So that's another thing I look at. The bid-ask spread isn't too bad. I mean, it's a little bit larger than what we typically see in like an ETF, but for a stock, not too bad. And then the last thing I do, I'm not going to go through every one of these, and for the member that left this comment, don't worry, I am going to put this in the comments area. The next thing I do is I go into my Investors Business Daily and I look at it here. XLE was the one I was doing, right? So let's make sure I click on the right one here. And this is where I just get a good look at the fundamentals of the stock, right? So XEL, I keep saying XLE. I think XLE was one of the ETFs we followed. But if you look at this, so composite rating it doesn't match up with like our hot stock formula. We want that composite rating a little bit, well, up in the 90s, but it's not too bad. EPS rating isn't very good right now. It's in the red and it's yellow for the composite rating, but it's green across the board everywhere else. It's ranked second in its group. So it's actually a pretty good stock from a fundamental standpoint. And then the last thing I will tend to do is look on Yahoo Finance. Yahoo Finance is pretty good in that actually I've just got this matched up against the DIA. I was just kind of seeing how it traded in reference to the general market, and you can see it kind of almost, it's weird. Sometimes it trades with the market and sometimes it bucks the trend of the market, and that's probably typical of an energy stock. I don't do a lot of energy stocks, so but I'll look at kind of the financials. So if we go over to the financials here, what I want to see is I want to see that these numbers are kind of going up, and I don't just look at gross profit. Another thing to be mindful of is operating income or loss, and then your net income from continuing operations. You kind of want to see those things going up. If you see them go down, then you want to just kind of look for, okay, what caused it to go down? Sometimes a company sinks a lot of money into R&D and that's why it went down, or maybe they took over another company and that's why it went down. So those are things you look at. But that's a real quick look at how I sift through those. And that's pretty much it, you guys. I don't have any open trades, like I said. I have my spreadsheet open, but I don't have, that's my short-term trading account. Sorry, it's so weird when I'm on. I don't know that I updated. The only thing I did do, oh, okay, so I will let you know. So this was, let's put this in here. This $800 here was my, I got out of my last Apple call option. So I got out just in time. So the reason I got out is Apple triggered a red weekly. That was one of my exit strategies. So I got out at $800. So overall, I did pretty good on this. I didn't do as well as I could have. And I will touch on this real quick. One of the strategies I'm going to change up. If you look here, I sold. So what I did when I bought Apple, I bought it for, I bought 2 call options. They were each $800 a piece. So a total of $1,600. And what I did was I placed a good till canceled order that when one of those call options hit 100% profit, it sold out. And the reason I did that is it then gives me a free trade on the second one. I'm going to change that strategy a little because I could have done probably far better if I used a little bit different strategy. So I'm going to change it up. I'll tell you what my strategy will be going forward in the future on call options. Instead of selling just one of them, I'm going to sell them both out, and then I'm going to use those profits. I'm only going to use a portion of those profits to either get into a debit spread, a call debit spread on the stock, so I can keep riding that momentum forward, or if the price is right, I'll buy another call option. But I would only buy one, and I would only risk a max of maybe 50% of my profits, and I probably wouldn't even look at that. And the reason why is because it's not from a money perspective, because if you look at my monthly, I've more than hit my goal. 2 to 4% is my goal for the months of May. I've hit my goal, and actually that's probably going to come down a little bit because my bear call spreads are going to take away from this. But I've hit my goal though. So now I just have to focus on my June and July trading. I'm going to wait for the market to kind of sort itself out. Today's an update. If we start to see the market continue to go back down, then I'm going to do what Travis did and sell some bear call spreads. And especially if I see a monthly trade triangle come across Market Club, then I'll definitely do that. I haven't looked at Market Club today to see what SPY and those guys are doing. But if it triggers a green weekly, then you don't want to do any bear call spreads, right? You want to wait for, if today was a green weekly, let's say, I don't know if it is, but if it was a green weekly, we'd want to wait for another red weekly to trigger to do a short-term bear call spread. So that's kind of how we do that. So, all right, I think I went way too long, longer than I was expecting to go because I didn't have a ton to cover. Just wanted to cover those last few items. So thanks for tuning in, you guys. And if you like the video, hit the thumbs up button. If you haven't subscribed to our YouTube channel, I highly encourage you to subscribe. You'll get updates to not only when our weekly recaps come out, but whenever we put new content out there as well. If you have any comments, leave them in the comment section. We talk about this, we've talked about it in the past. If all you have is, if you're just going to criticize the way I trade, you can leave the comment. I probably won't answer you. Travis might, but I don't. You know what? If you're going to criticize me, if you're not going to give me any positive criticism, so to speak, if you're just going to criticize me and say my way doesn't work, well, I'm not going to answer you because my way works. Travis taught me how my way works. So that's it, you guys. You take care, and we will see you in our next live recap.